All right, just a quick review. See what's going on. So yeah, market was. I always want to, whenever I'm analyzing a trend from high to low, scope it, meaning the start of the trend, end of the trend, or start of the trend, end of the prior trend, etc., etc., and marking the climaxes and the change of behaviors. So this was the change of behavior that set up the down move right here. And this was the change of behavior that set up the up move right there. And this was the climax right there. I was going to mark, right? So that was the down leg, and this is the up leg. We'll see how far the up leg goes. All right, so anyway, let's take a look over here. This is getting interesting because the number of lows has increased significantly. Today, oh shit. So it went from 672 monthly lows to 979 monthly lows. So that's an increase of 307 extra monthly lows. That's not a good sign. And we might be in a down rotation. And all of this, so I think this may have set up the down rotation because it is a significant number of lows, but what's strange is that the volume hasn't increased on this bar. I don't know what's going on. I don't know what's going on. The volume should have increased, but it didn't increase. If you have that increasing number of lows, 307 more lows than yesterday, then why isn't the volume increasing? Who the hell knows? But it's clear it has a lower high, lower low, lower close than the prior bar. And we knew that from the prior bar that there's a chance. Let's see. Yeah, so from the prior bar, there was a reduction of highs by 64, which was a warning sign. Because you can see that the first green bar here has 43 higher highs, the other one has 38 higher highs, and all of a sudden the last one has negative 64 higher highs, which means we're retracting, and that helped forecast the move, the red bar afterward, which had 307 lower lows. So it's just taking a look at highs and lows. But anyway, we're going to see how this thing reacts and whether it does a spring of this low or not. What do the profiles say? Let's take a look at the profile. I don't even know where I put the profile. Maybe I'll do that later, but definitely this area right here, where you have a bunch of overlapping bars, this is some type of support already, and we want to see if it springs or not. Now let's take a look at this on the hourly. How did this turn look? Okay, so this is the daily turn right here on the daily, and we want to see how that turn looked on the hourly chart. Okay, all right. So I'm going to show you how this thing happened from that low. All right, so from this low, you see that in this red bar right here on the daily, let me just mark that. Right? You see a bunch of clustered closes, close, 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 all in the same range. So that's typically a sign that there's going to be that there's lack of net progress and shit like that. All right, so it goes up, up, up. Climax right here, biggest volume in about 11 waves, and a significant increase in time and price here on 18 hours and $8.10, with the biggest volume in 7 waves. Confirmation. This would be your All right, everybody, I'm just going to quickly go over the SPY, and on the left-hand side is the daily, in the middle is the Renko. This is just like a middle time frame, and I believe it's really good. And on the right-hand side is the intraday 3-minute chart. You can use a 5-minute chart, doesn't really matter. So the same, it's an intraday chart. On the left-hand side, we'll go over the SPY. So basically, market was in a downtrend. Right here, it turned out you want to always mark the change of behaviors and all of that stuff right here. Like that's your change of behavior, the initial impulse. That's your lack of demand right here. That's your confirmation over here. And it continues to go down, boom, boom. Right here, the volume is extremely heavy with 40, the biggest price in 22 waves and biggest volume in 40 waves. So, I mean, no wonder they're bouncing back up, right? And here you had your spring right there. How do you know it's a spring? So that's a good question. Like folks will say, oh, it's a lower low. How do you know it's a spring? How do you know it's, all of that? So one way to do it is to take a look at what's going on in the other markets, like other indexes. The other way to do it is take a look at a statistic, like any breadth-based statistic. And you see that over here, you had 274 stocks rallying and it made higher lows. So this is a spring, because typically breadth-based statistics, when a spring makes a lower low, they don't. Okay, again, like your breadth-based, market breadth-based statistics, when a spring does a lower low, it doesn't. The breadth statistics don't do it, and you could. That's one way to identify, and I'll show you right here. Right here, you have what? You have your upthrust, right? That was doing a test. Yeah, I mean, you could call it an upthrust against this high, right? It goes high, but the breadth-based statistics, they don't do it. They don't make a high as the upthrust. That's typically the case. So, and the same thing with the spring. The lower low that the spring makes is not usually seen on any market breadth statistic. So this is one way to help identify. And this has not been talked about again in any of the stuff on YouTube and whatever. But real practitioners of Wyckoff know this. Others, I have no idea what the fuck they're doing on YouTube. Pardon my language. All right, so it went down, down, down. Here you have there's your change of behavior from the spring, shortening of the thrust of the spring, whatever you want to call it. In the context of a trend, it's a shortening of the thrust. In the context of a trading range, it's a spring. But really, it's the same thing. All right, it's just the context. Is it a range or is it a trend? Here you had the pressure, but market breadth statistics help confirm that. And here you have the diversion, boop, and then the high, and then the higher high. Right here you had a diversion, which I knew there's something wrong with this, and it's going to pull back after that diversion. So boom, and yeah. But right now with this breakout, the trend is up. How far it goes, we'll be watching the breadth statistics and all of that to identify, And now what you really want to do is do a count. The count can be done against these support lows here and it's in this high low. And there's enough of a base here, folks, for, you know, a rise. So, I mean, it won't be easy to take out these highs. Already you see over here the breakdown. I was tested, it pulled back. They retested only one day, which is very bullish, and then rallied. Now, how far is it going to go? Is it going to go up here? All of this has been tested already, so that's what we're going to see. So anyway, you have a price volume action here that makes it bullish. You have volume over here that also makes it bullish. So buying plus buying. Pullbacks are what? 3-day, 2-day, and 1 day is nothing. Nothing. Like ones and twos. This is extremely bullish action. If it's only pulling back for 1 and 2 days, it's pretty bullish. Alright, and today also what makes it bullish is the volume increase. You see the rally over here. It increased on a lot of volume. I mean, I'm reading over here 80%. It's almost double the volume of the prior day pullback. So this pullback was met with almost double the volume on the breakout. It's extremely bullish. So how is it going to pull back and test? I don't know. But this is legit. Look at the volume increase. The volume increase here is the biggest volume in 19 bars. So what do you want me to say? Right? And the number of monthly highs participating is an increase of 244 stocks increasing with a total of about 896, at least the ones that I'm tracking. So 896, which is an increase in 244. So clearly, this right here is bullish. Your participation from its components and participation from the market itself. And I guess they're done with the pullback. Last pullback, 74. And now already 134 participated. So up here from that low. So already the numbers are increasing, greater than the prior two. So, I mean, looks bullish. All right, now let's use the middle time frame. Now for this, you can use hourly if you want. A lot of folks don't use Renko, but you can use the hourly. It's the same thing. You can use hourly or 30-minute. But Renko, I believe, has an advantage in that it will give you, I mean, the downside of it, you have to define the brick size. All right. The upside of it is you will see stuff that will show you where the pullback will end. Anyway, let's go. So, I mean, one here, you see the heavy volume here lift off, the 32, right? And what gets tested. So here, pull back on the first bar, increase in volume, fall by green bar. What does that mean? It means it's a minor climax, which is a good thing. Then here you have your 61. What does that mean? That's your breakout. What happens after that? Pull back and hold. Tap, tap. 76. Reversal. 28. 70. This is, you see this heavy volume? If it would continue down, it would be threatening, but it's actually buying in there against the breakout. So this is a test of the breakout, and you have a spring right after it. So you have your breakout test, buyers there, tap, tap, right here, spring against this low. Where's your next level of breakout? Right over here. Look at the wick associated with it. What does that mean? That means they tried to go down, failed, and then they had to go up instead. So after that, the volume here was a little bit too much. So it's climactic, as you can see here. Biggest volume in 22 and 24. And after that, it pulled back some. Where does it go? Oh, look at that. The brick with the highest volume. Isn't that novel. Right here, this is your demand. Why is it your demand? Look at the amount of volume here. In this entire wave up, this is the most amount of volume. So where is it going to go? It's going to test that, right? And then from that, the reversal, again, look at the increase. So it's all buying off of this area. And then goes up, test, boom. Where's the breakout? Right here. You see it very clearly. Pop. Right there, increase in volume. So against what level? Obviously this level. So it's there. Okay, so I'll be taking a look. Let me take a look at yeah, I just take a look at the last wave and see how it occurred. Sorry for all these lines. Sometimes I go nuts with the lines. But basically, price went to that level and it rallied. So it gapped up. So I can't really show you the change of behaviors there. I can show you this though. So just pretend like the lines are not there. All right. So what happened was the market was going up, 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 up. Right here it stopped. Now the question is, why did it stop right there? Why did the market right here stop and fall back? This is important because this is tradable. This is good tradable information. And Renko will answer that for you. Why? Because you see this selling wave here? Look at this big spike in volume. This in 21. Right there. Now, lo and behold, that's exactly the area that this thing was in. And that's why it fell back. So it's very important to understand where this area of selling is because it gets tested. When it gets tested, it gives you that little selling opportunity, but that little selling opportunity is actually a quite big opportunity on a lower time frame. All right, so that's why it got stuffed because of that pressure there. And Renko is excellent for identifying the levels. Now, if you want to take it a step further, you could use a profile as well. Profile will just refine it even more. So if I say, for example, do this, as you can see, the Renko, the profile will just see this, that POC area right there. Where did it go? Tested that exact area. It's a little bit higher, but that's what happens. So that gives you the range, like about around where it's going to go and where it's going to fall. But you have to see the lower time frame. So as soon as it gets into that area, what are you looking for? You're looking for this. There's consolidation, all that, and the puke. As a puke happen, you can sell the test and get this move down. All right, and you see that, I mean, Renko profile for pullback buying is it's critical. Maybe not critical, but I mean, you need to know where the heavy players are. See, for example, here, I mean, you're not seeing it because I haven't drawn the profile correctly. You see it's all the way up here, but if I just drag it, so it covers the accumulation area, you will see that that's exactly where the pullback went in and reversed. Right? So I'll give another example. Like right here, your POC, go right into that area, buyer step in. How do you know the buyer is going to step in? You go to a lower time frame and you just look at the low time frame and you see the buyer step in. I mean, I don't know how else to explain it. You just see pressure, buying pressure on the low time frame. And again, here I'll show again, just draw the profile from low to high. And in this case, against this breakout, we see the area, and that's the area it goes to and reverses. You want to see it again? No problem. go right here to here, right? If it gives you it too high up, that means you drew it incorrectly. So because you know that the buyers are near the low, right? So if it's giving you a POC all the way up there, it's because you drew it incorrectly. So you move it around. If it still gives you a POC up there, don't take the trade, in my opinion, because there's a distribution. So all you have to do is first check by just dragging it here, dragging it there, and then you see, oh shit, now I get the right POC. This is the level, ready to go, went to that exact level. See that? It's usually in that range, and this time it went very exact. Do it again. I just showed this. Pop, right? That green line, tap. Do it again. Now it's showing you, oh, look, it's too high up, right? So what you do is you just expand the profile until it comes down, and where to go, right, that area, pop. So now what do you think I'm gonna do? From this low, just do the same shit over again, right? Now here's the problem. Because there's a gap up, I don't have the prints, so I don't know what to do. You know, maybe it'll stop at the breakout. There's a POC, but it gapped up, so I have zeros here. And that's not good because I can't figure it out. So the market gaps up. You just can't figure it out. It's not gonna give you a read. I might be able to use this POC by dragging it back and seeing where it's gonna go, but I'm really unsure because of this gap. The zeros, the big market gapped up today, so you can't tell because the data, there's no trade there, so there's no data. So if there's no data, like, what do? You do nothing. You just, the breakout's there, the low bar's there, there was a spring, right? So it might test that spring. If it does test that spring and goes down, then you have some edge right here. Because you see the green line POC? It might go there, but not really sure because of the missing, the gap up. The thing I might have to do is just go on the futures and check the ES or something like that, which I don't feel like doing right now. So anyway, long story short, that's how you do it. I've just shown you guys how to combine. I've just shown how to find trades using Renko with profile for the best optimum areas, because Renko will show you the high volume brick. It'll show you the high volume brick, like in this wave, 70 here is the high volume brick. So if it comes down in that area, it has a very good chance. You have a very good chance for a trade. But you don't know exactly the level around the exact level, and you want to confirm it with your profile. So you can do it like that, and you confirm it with your profile. And if the profile is up here, there's an issue. So what you want to do is drag it back and bang, right there. Profile confirmation, where you have the green line, boop, goes in there, reverses back up, goes up. That tells you, what is it telling you? Profile, the POC at the bottom is support. Yes, it's support, but it's more than that. It's basically identifying where the activity is of accumulation, right? So here, for example, this 89, I know that there's heavy selling, there's some distribution there. So now I'll just draw the profile. Bang, there's the distribution in there. There it goes, and there it pulls back, and this sets up a big trade, really big trade over here. Break, test, and down she goes. And you could confirm this also with any breadth indicator. I strongly recommend to use breadth indicators. Wyckoff used breadth indicators. He used his own breadth indicators. He used the trend barometer, which was just a bunch of stocks in certain positions. and use a position sheet, and the position sheet would tell them position 1, 2, 3, and 4, which of them are in bullish positions, which of them are bearish positions. That's just like, you advance and decline, or bullish, bearish, breadth ratio, whatever. So the idea is to definitely use the breadth indicators, and even the trend. Trend is what? It's a representation, like an index, a representation of 500 stocks. So that's market breadth, because it's a calculation on a lot of stocks, right? So that's always market breadth. So if you think of it from that perspective, Wyckoff method is nothing more than trading with the breadth of the market. It's not just a trend. Trend equals breadth. Anyway, I'm done, and this is how it's done. The daily, a middle time frame. If you don't feel like using this, use hourly with profiles, and that's fine. But I do think that Renko is very clear in the rally and the pullback. The rally and the pullback. The rally and the pullback. Very, very clear, and shows you the brick with a high volume to buy against, brick with a high volume to buy against, which you can then use a volume profile on to see, in a very simple way where it's going to go. I mean, even over here, check this out. Just go here to there, I think. If it's high up, what do? Is take it back. Boom. So it's in here. Where does the market go? It goes almost to that level exactly. Look at this. Look at that green bar right there. Look, that's the gap. And that's your area. And then what do? You go on the lower time frame and you see what happens when the market goes to that area. And if it's bullish, you get in. That's it. All right. So this is the combining of the daily, a middle, and a lower time frame together. Daily setting, and then breaking the daily into bricks, right? Which shows you the pullbacks, and those pullbacks fall with the low time frame entry. Sometimes there's a lot of indicators, so I'm trying to use less and only use what I need. But I mean, everything here has a purpose. So anyway, thank you. Have a good day. Bye.